What are the risks of investing in a bond? If you're an investor, you understand the value of diversification. Creating a portfolio with mixed asset classes like stocks, currencies, bonds, derivatives and commodities is probably the most effective way to generate consistent returns. Bonds are regarded as a reliable investment tool, despite the fact that they do not always provide the best returns. They are well known for generating consistent income, but that does not mean they are risk-free. Before you invest in a bond, you must first understand the fundamentals of bond investing. In this video, we have explored some of the key risk factors to consider when investing in bonds. Interest rate risk. When you buy a bond, you agree to receive a fixed rate of return, ROR, for a set period of time. Bond prices are said to have an inverse relationship with interest rates. If the market interest rate rises, the bond's price falls because the bond's interest rate becomes unappealing. If the market interest rate falls, the bond's interest rate becomes more appealing, and thus its price rises. Interest rate risk is the risk that the bond's price will fall after you buy it due to an increase in market interest rates. Risk of reinvestment. Reinvestment risk is another risk associated with the bond market. Reinvestment risk refers to the risk of not being able to reinvest bond proceeds in another bond that pays the same or higher rate of interest. Assume you purchased a bond with an interest rate of 12% for a term of 10 years. You receive the proceeds upon maturity and choose to reinvest in a bond. However, the interest rate has now dropped to 8%. This bond risk is known as reinvestment risk. Default risk. The risk of a bond's issuer going bankrupt and being unable to pay its obligations on time, if at all, is known as default risk. If the bond issuer defaults, the investor may lose some or all of the original investment as well as any owed interest. Inflation risk. Inflation can reduce the value of bond returns in the same way that it reduces the purchasing power of money. Fixed bonds, which have a fixed interest rate, are particularly vulnerable to inflation risk. To conclude, despite the risks, investing in bonds can all help you build wealth in the long run. Make sure you understand the fundamentals of bond investing before investing in one. You'll be able to make better decisions this way. Check out this space for more such educational videos on stock market from Accordions Business Services.